Good morning, all of you. This is Vivek Anand. Now we are going to start the course of auditing. Auditing have various segments. The first is Introduction to Account Auditing. In this topic, in this segment, Introduction to Auditing, we have various sub-segments. The first is meaning and definition. Second is objectives, features, origin and evolution of auditing. Third is basic principles governing audit, techniques, scope, and the fourth one is advantages and limitations of auditing. The first is meaning and definition. Let we start from the meaning and definition. In the sense of meaning of auditing, we can say that auditing is such an examination of books of accounts and vouchers of business that enable the auditors to satisfy himself that the financial statements is properly drawn up so as to give a true and fair view of the state of affairs of the business for the financial period according to the best of information and explanation given to him and as shown by the books. In this meaning of auditing, we have various important words from which we can gain the exact meaning of the auditing or we can gain the easy meaning of the auditing. The first one is examination. Examination means, in simple words, we can understand it as checking, checking off. Then the second is books of accounts. Books of accounts refers to the books of accounts maintained by a business concern, which includes various types of registers, statements, daily based payments, other important points. And vouchers. Vouchers specifically we can refer it as bills. And what about the business? Actually, examination of books of accounts. And books of accounts is always related to a business purpose that enable or that provide a authority to the auditor to satisfy himself that what about satisfying that the financial statement is properly drawn up that accountant or other staff of a business concern has properly made the financial statement of a business concern. Financial statement includes profit and loss account, balance sheet, cash flow statement, and other statements that is required to complete the financial statement. Purpose so as to give a true and fair view of the state of affairs. The financial statement have to present a fair view, a clear picture of the state of affairs, of the situation, of the circumstances of business. That what exactly business is going with, whether it is earning profit or suffering with loss for a financial period. Actually, accounting is always done for a particular period that is called financial year. Financial year is always started with the 1st April and the ended on the next year 31st March. So, affairs of the business for the financial period according to the best of information and explanation given to him and shown by the books. So, auditor satisfied himself with the making of financial statement for a particular period that is based on the information that is based on the explanation given by the accountant. So auditing can be explained as in a simple meaning that it is an examination of books of accounts and vouchers of a business concern that provide a capability to the auditor regarding the financial statement. Capability means he can say that financial statement is properly drawn, is properly made by an accountant of the business concern. Properly made means all the registers, all the balance sheet, profit and loss account registers, and cash flow statement and other related documents has been completely made by the accountant. And all these are related to a particular period. So In conclusion, we can say that auditing is an systematic examination of books of accounts of a business concern to provide the true and fair view of the financial statement of that particular business. So here, as per the meaning, we can conclude it that simply auditing is checking of books of accounts, examination of books of accounts of a business concern for the conclusion that they are prepared in a proper manner and showing the actual picture of the business concern. First is Spicer and Peg. They concluded that auditing is such an examination of books of accounts and vouchers of business as will enable the auditor to satisfy himself that the balance sheet is properly drawn up so as to give a true and fair view of the state of affairs of the business, and that the profit and loss account gives true and fair view of the profit or loss for the financial period according to the best of information explanation given to him and as shown by books, and if not, in what respect he is not satisfied. uh, After the mean, we can add something that is specifically provided by the Spicer and Player. That is, the thing is, in what respect he is not satisfied. Means, if auditor is not satisfied somewhere with the presentation or preparation of the books of accounts, then he has to clear. He has to give the reason for that particular portion. That for this portion he is not satisfied. Next, Professor L. R. Dixie. He is also given the definition of auditing. He also explained auditing as an examination to satisfy the auditor regarding the correct and complete preparation of financial statement of a business concern. Again, ICAI provides time to time the guidelines for the auditing. In this case, according to general guidelines of internal auditing issued by the ICAI, we can also conclude auditing as a systematic and independent examination of data, statements, records, operations, and performances. Performance, whether they are financial or in the qualitative or nature of an enterprises for a stated purpose, to formulate a judgment by the auditor regarding the preparation of financial statement. Now we discuss the objectives of the audit. As per the Companies Act 2013, Section 143, 3 Section 1 Clause 1, the provision is stated that there are two objectives of the auditing. First is primary objective, that is prime objective of the auditing. Second is secondary objective. Primary objective is to give a true and fair view of the state of affairs of the business concern. True and fair view refers the actual position of the business. Actual position means what balance sheet shows and what shown by the profit and loss account. Balance sheet imparts us the financial position of the business, whether they are going with the liabilities or assets. Means how much assets in comparison to the liabilities is there. In case of profit and loss account impart us about the profit earned or loss suffered by the business concern. So this is the primary objective of an auditing process, that what is the actual position of the business in the sense of balance sheet and profit and loss account. The secondary objective is detection and prevention of frauds and detection and prevention of errors. Actually, after the auditing, we can say that there are the less mistakes left in the financial statement, or there are minimum errors in the financial statement. As a secondary objective, auditor have to describe that how much frauds and errors he find in the process of auditing and what suggestions from his side. So secondary objective is also called as incidental objective. Actually, to find out the fraud, to detect the error is not a prime objective of the auditing, but to give the true and fair view of a business concern. It is the duty of auditor that he have to do the auditing work in that sense that chances of frauds and errors should be minimized. So, as an incidental objective or secondary objective, we can say that detection and prevention of frauds and detection and prevention of error is the secondary objective of auditing. What about frauds and what about errors? Frauds means the deliberately misrepresentation of books of accounts. Errors, this is unintentional mistake. There are minutely difference in the fraud and error. Fraud is intentionally and error is unintentional. In short, fraud refers to the intentional misrepresentation of financial information with the intention to deceive. Frauds can take place in the form of manipulation of accounts, misappropriation of cash, and misappropriation of goods. In the another way, errors refers to the unintentional mistake in the financial information arising on account of ignorance of accounting principles. Now the next segment is origin and evolution of auditing. Actually, auditing is the word, is the English word which comes out from the Latin word order, which means to hear. In the ancient time, auditing is done by the auditor by hearing the transactions of books of accounts by an accountant. And the auditor who used to hear these accounts and express this opinion about the correctness and otherwise on the position of the books of accounts. And auditing actually very old course. It is very old subject. Even it is as old as accounting. It was used in the ancient countries such as Mesopotamia, Greece, Egypt, Rome, UK, and India. The Vedas also contain the reference of accounts and auditing also. In Arthashastra by Kautilya, detailed rules for accounting and auditing of public finances are there. The original objective of auditing was to detect and prevent errors and frauds. It is also mentioned in the ancient time in the books. So we can say that auditing is not a new subject. Actually, it is as old as other subject. It is totally related to the accounting. In the next segment, we can discuss about the features of the audit. The first one is systematic. The word systematic we draws from the definition of auditing. That auditing is an systematic examination. Actually, it is a systematic process to check, to examine the financial statement or books of accounts. Systematic means step by step. We cannot go on the last step of the auditing, that is reporting. Actually, we have to start from the first step of the auditing, that is vouching. The second one is objective. In the features of auditing, objective of auditing is very important. And as we have read in the main topic of objective of auditing, we discussed this that there are only two objective of the auditing. First one is to give the true and fair view about the preparation of financial statement, and the secondary objective is to detect and prevention from the frauds and error. Actually, the secondary objective, what is detection and prevention from frauds and error, is an incidental objective of the auditing. First objective is to find out the true and fair view of a books of accounts. The third feature is in-depth knowledge. Actually, auditing is conducted either by the auditor who have in-depth knowledge of accounting procedures and legal formalities. Without depth knowledge of the auditing subject, an auditor cannot do the audit assignment in a better way. The fourth feature is truth and fairness. It is actually related to the first objective of the auditing. It ensures that the truth and fairness of the financial statement, it is reflect the exact status of the state of affairs of the business concern. In another way, we can say that what is actually going on in the business, what is the truth and fair situation of the business. The next one is accounting standards. Actually, auditing is based on the laws, is based on the guidelines, is based on the rules and regulations. And accounting standards ensure that the statement means financial statement is prepared in accordance with the prevailing law and accounting standard related to that particular business concern. There are various accounting standards issued by the ICAI. Among the various accounting standards, auditor have to ensure that related accounting standard should be followed by the business concerned in the preparation of the books of accounts. Now we discuss the next segment of the auditing, that is basic principles of auditing. Actually, in all the subjects, there are some basic principles. In auditing, basic principles is laid down by the standard on auditing that provide a guideline, a path, a curve, a area for, about which the auditor have to concern very much. In other words, we can say that auditor have to follow all these principles while doing auditing assignment. After the following these principles, the audit assignment done by an auditor may be up to the mark. So let us discuss the basic principles of auditing. The first is integrity, objectivity, and independence. It is expected from an auditor that he should be very honest, straightforward, and having sincere approach about their professional work in form of audit assignment. It is expected from an auditor that he have to be very honest about his work while he is doing an audit assignment. He should be very straightforward towards the objective of auditing. Second one is confidentiality. The auditor should respect the confidentiality of the information acquired in the course of his work and should not disclose any such information. This principle imparts the auditor that if any information he gathered while the doing audit, he should not disclose it to the third party without the permission of his client or until it is required by the law. If there is a requirement that it should be disclosed to the third party by law, then he may go for this, or otherwise for any information that auditor want to disclose to the third party, he have to get the prior permission of his client. Next is skill and competence. The audit should be performed and the report prepared with the professional care by persons who have adequate training, experience, and competence. Without the competence, skills, and experience, An auditor cannot touch the standard of audit. Next is work performed by others. Actually, only auditor didn't do the audit work. He and his staff, his trainee staff, may go for do the audit assignment. The auditor should carefully direct, supervise, and review work delegated by assistant. He have to go with the proper care while he is using the work done by others. Others means his staff or his trainee staff. Because the onus to prove that whatever work has been done, it is only on the shoulders of auditor. So, while doing the audit, while using the work done by the assistant, the auditor have to be go with the proper care because he is only the person who is liable for the audit assignment. The next is documentation. The auditor should document matters which are important in providing evidence and the audit was carried out in accordance with the basic principles. Important documents can be taken by the auditor while auditing as like loan agreement, loan deed, business policies, management policies. He have to take a photo state and get in its in his file for the future reference. Next is planning. Actually, no work can be performed better without any planning. So, in case of auditing, it is also required that auditor have to plan before initiating the auditing work that how much time he is required and what number of staff he is required to do an effective audit in an efficient and timely manner. Evidence. The auditor should consider in each type of transaction to verify audit evidence. Each and every transaction should be verified by the auditor with proper audit evidence to do the audit assignment in a better way. Next is accounting system and internal control. Actually, auditing work will be done by the auditor in a perfect manner or in a better manner only when he have get the knowledge of accounting and internal control of the business concern in which he is going to do the audit work. Accounting knowledge means what type of policies, what type of accounting standards, what type of law are prevailing in the industry and among them what are related to that particular business in which he is going to do the audit work. Internal control. He have to ensure that whether internal control is working in the business concern or not. If internal control is there, then he may feel some relax from the deep checking in those areas where the internal control is working very effective. And the last principle is audit conclusion and reporting. The auditor should review and assess the conclusions drawn from the audit evidence obtained and from his knowledge of the business of the entity and the basis for the expression of his opinion of the financial information. The auditor should present his report in written format. He is liable to present an opinion, not a decision. So this is the last point of basic principles governing an audit. By following these principles, an audit assignment can be done in a very effective manner by the. Now we will discuss the techniques in auditing. There are 6 techniques which can be discussed in this point. First is inquiry and confirmation. Inquiry means asking the questions from the staff and management regarding the transactions, regarding the information gathered in the books of accounts. And obtaining the direct verification from the third party about the account balance is called as confirmation. There is a minute difference between the inquiry and confirmation. Inquiry means asking, confirmation means uh, getting the evidence regarding the particular transaction from the outside. This technique is mostly used to verify the account balance of creditors and debtors. Second is observation and inspection. Observation means to find something by watching process or procedures being performed to ensure they are conducted as described. This is called as observation. Regarding the inspection, we can say that reviewing documents, records, and tangible assets to verify their existence and condition. This is included in the inspection. Inspection may be physical or only with the of records. Third is surprise check. Surprise check we can discuss as that the auditor and his staff without any prior information come to the business concern during the period of auditing and check the books of accounts. Suppose the auditing work is going on with the investment verification, but same time auditor ask about the cash management or cash flow. This is called as surprise check. The main element of surprise check is that auditor comes without any information. The next point is re-performance. Re-performance entails the auditor executing the questioned control manually, such as repeating an automated computation. Means, suppose auditor is doing auditing and he finds some calculation which is performed by the techniques. So, in case of re-performance, auditor himself go with the technique and find out the actual calculation. Fifth, analytical review process. Analytical means comparison. Review means analyze. Procedure means technique. Analytical review process means comparing the data of two and more financial year or over the time to find out the fluctuations, differences, variations, and deviations from the actual figure. So, in analytical review procedure, auditor uses various techniques for the analysis of financial statement as like as trend analysis, comparative statements, common size statements, cash flows, self-balancing ledgers, fund flows. By these techniques, auditor analyze the financial statement more than two or over the years. The last technique is CART. CART refers to the computer assisted audit technique. Actually, this is the technique which actually used in the computerized accounting system. Means cards are the technique that are used by the auditor in that organization where the books of accounts are kept in electronic mode or with the help of a accounting software as like Tally, Munimji, something. So these are techniques which used by an auditor while doing his audit assignment. Audit is the examination of books of accounts. And doing the examination, auditor can use all these techniques or some of the techniques which is related with his audit assignment. By using these techniques, the auditor can perform his audit assignment in a better. Now, regarding the scope of auditing. Scope means what exactly covered in the term of auditing, in the process of auditing. Some points are there. The first is audit should cover the examination of all aspects of entity relevant to financial state. Actually, while doing the auditing, the auditor have to concern with all the financial nature of transaction, financial nature of elements to consider in auditing process for better audit assignment. We can also say that auditors should assess the sufficiency and appropriateness of the information. Actually, in the last process, in the last step of the auditing, audit present is audit report. But the audit report is always based on the observation gathered by the auditor, information gathered by the auditor, analysis gathered by the auditor in audit during audit assignment, and it is based on the information and transactions available in the books of accounts or accounting information. So, as the scope of auditing, auditor have to ensure that sufficient and appropriate information is there to evaluate accounting system, to perform necessary tests, and to do the inquiry or verification regarding the information available in books of accounts. Next one is disclosure. To determine whether the information is properly disclosed in the financial statement, auditor may involve comparison technique and technique to observe the data available in books of accounts. So he have to ensure that all the information that should be available for the audit procedure should contained in the books of accounts of the business concern for which he is doing the audit work. Next one is duties of auditor. Actually, the scope of auditor is also define the duties. Also make a curve on the duties of the auditor. Auditor is not expected to perform duties which is outside of his limit or outside of his working area. He have to he have to concern about the duties that is in his ambit only. The next one is limitations. Actually, the scope of auditing also describes the limitations, if any there. Limitations, if any, on the scope of audit that impair means decrease the auditor's ability to express an unmodified opinion should be sent out in his report. Means auditor have to be very much independent about his audit assignment. If he want to give an true opinion, a proper opinion regarding the auditing work that he has done on the books of accounts of a business concern, then he have to very independent in his work. There is no partiality, there is no pressure on him. Some limitations of auditing that is faced by the auditor while doing auditing. As per SA Standards on Auditing 200, overall objectives of the independent auditor and the conduct of an audit in accordance with standards on auditing, the auditor is not expected to and cannot reduce audit risk to zero and cannot therefore obtain absolute assurance that the financial statement are free from every type of error, or it may be said that the financial statement is true, true and very much true, because there are various types of limitation that affects the work of auditor. This is because there are inherent limitations of an audit, which results in most of the audit evidence on which the auditor draws conclusion and bases the auditor's opinion being persuasive rather than conclusive. So the limitation are, first is gives opinion. Actually, the auditor is curbed by the thing that he is authorized to give only the opinion on the books of accounts on which he have done the audit work. He is not authorized to give any judgment, any ensurety, any guarantee regarding his work. He can give his opinion in written manner, that is called audit report, that whatever he have gathered, he have analyzed, he have examined the books of accounts. On that basis, what is the position of the business? Second is chances of undisclosed error and frauds. Actually, the auditor is depends only the information provided by the business concerned for the audit purpose. In this situation, if any information that is important, related, unrelated, or or legal, that is intentionally or by mistake not provided by the management to the auditor, then audit is completed by the auditor in a good manner, but undisclosed error and frauds may be there because he didn't receive all the information for the audit purpose. So if intentionally management hides some information, then chances of frauds and error may be there. Next is lack of proper care and skill. Sometimes it happens also that auditor is not very much careful about his audit assignment. He completed his audit work in a easy way and didn't follow the proper due care that is expected by an auditor to do the audit work. In this situation, frauds and error may be there, or it may be said that books of accounts may be with fraud and or error even after the auditing work. No evaluation of managerial efficiency. Actually, auditor in audit process only consider the financial transactions. What is the management's ability, how they are managing the business, what techniques they are using, what mental level they are devoting to the business concern. It is not considered by the auditor. He cannot give his opinion regarding the managerial efficiency because every concern has its own policy, procedure, and practices. So, this is the limitation of auditing, that no evaluation of management efficiency is there in auditing work. Next is not preventive. Next is not preventive, or it is a post-mortem examination. Means when the books of accounts has been completed, then audit will start. Actually, where the accounting is end, auditing is starts. So this is as like as the post mortem. In auditing, in auditing work, the auditor, when he start audit, he start audit only of those transactions which has been done previously. The work of audit starts after the completion of transactions recorded in the books of accounts. So, audited accounts can prevent the future activities but not the past. They can prevent that are fraud and error that has been occurred in the past may be not occur in future. So it can be said that auditing is only a post-mortem examination. They cannot rectify the past fraud and error, but may provide a prevention from the future. Now we will discuss the advantages, benefits, or profits from auditing. These can be described in the three categories. First, advantages of auditing to the business. Second is advantages to the owners. Third is advantages of auditing to the outsiders. Let us we discuss first advantages of auditing to the business. The first is exhibits a true and fair view of the financial statements. Actually, after getting books of accounts audited, a business finds that his books of accounts shows the true and fair view of the business concern in relation to the profit and loss account and balance sheet of the business concern. Second is detection and prevention of errors and frauds. Audited books of accounts shows that errors and frauds can be detected and necessary action are taken to prevent from errors and frauds in the future. Next is expert advice. Auditors who possesses professional expertise after auditing the business concerns books of accounts can give the experts advice in the various aspect of the business for that portion specifically in which business is feeling weak, in business is going weak, and after remedial steps the business can overcome from the weakness. Next is check on employees. When accounts are audited, it creates a moral pressure on the employees to be very cautious and regular in their work. As a result, the chance of error and fraud will be minimized, not up to the level of zero, but minimized. Next is helps in resolving dispute. Actually, audited books of accounts are taken as the evidence, as a proof in the honorable court. So, if there is any dispute between the third party and business, then audited books of accounts can be taken as the reference for the particular transaction on which dispute is arises. So, audited books of accounts provide the benefit of providing proofs or reference at the time of any type of business dispute. Next is helps in determination of claim. Actually, insurance company always settle claims to the companies for the loss due to damage of business property only on the basis of audited books of accounts. So it is very much beneficial to the business to get their books of accounts audited. Helps in obtaining loan. Any type of business institution, financial institution, or bank provide loan only when then they analyze they that the loan taker will repay loan or the loan taker have a capacity to pay the loan, and these institutions which are providing loan judge the capacity to recover the loan only on the basis of audited books of accounts, because the audited books of accounts provide the true and fair view or actual information regarding the position of the business. Next is help in decision making. Audited accounts are valuable and trustworthy. So any type of decision may be taken by the management on the data provided by the audited books of accounts. Next is helps to determine future trends. By using the analytical review procedure on the basis of audited books of accounts, management can take the proper decision for the future policy making and the future of the business. And the last benefit to the business from audited books of accounts is increase in goodwill. Audit of business on a regular basis increase confidence of the investment in the business concern. And audited books of account provide the proper information regarding the books of accounts of the business, and audited books of accounts also provide the true and fair view of the business. And audited books of accounts is trustworthy from the point of view investors, creditors, and loan agencies. So creditworthiness or regular audited books of accounts provide a confidence to the interested parties and general public, or as a result, goodwill of the business can be increased. The second category is benefits to the owners. In from the point of view of the owners, there are various benefits or profits to the from the auditing. First is benefit to the sole proprietors. Actually, audited accounts provide assurance to the proprietor about the accuracy of accounts maintained by his employee and also enables to know the financial performance of the business. It further enables the proprietor to obtain loan and in computation of income tax liability. Second is benefit to the partners. In a partnership firm, audited accounts help the partners in settlement of the accounts among the partners at the time of admission, retirement, and in case of the death of a partner also. Third is benefit to the shareholders. Audited books of accounts provide the proper information to the shareholders. Shareholders are the actual owners of the company. With the help of audited books of accounts, they get a real picture of the financial position of the company, and that directs them to invest in the business. And directors or managing directors have also take the proper information from the books of accounts so that they can declare the dividend or retention ratio of the profit. Fourth point is benefit to trust cooperative societies. Audit of accounts of cooperative societies and trust provide evidence that the interest of the beneficiaries and members are properly protected. Means what type of assets govern to the cooperative society and trust is actually using for the stated purpose only. Third category is benefit to the third parties. Actually, third party means these are the persons or parties that is not owner, not business itself, but they are third party. Bank and financial institution. Actually, bank is used by the business concern only to take the loan. So, it is very much necessary by the bank that he have to ensure the recovery of loan. And recovery is only depend on the actual or true and fair position of the business that is revealed by the audited books of accounts. Next is creditors. Creditors who supply the goods on credit to the business. If audited books of accounts is there, then they have the confidence in the information of books of accounts and maybe go for the supply of the goods. Third is insurance companies. Insurance company always settle the claim on accurate data, and accurate or trustworthy data will be available only after the auditing of books of account. Statutory authorities. Statutory authorities means like income tax authority, sales tax authority, and other government authorities that is related to the business. They accept audited books of accounts only for any type of liability, for any type of relation, or any type of business deal concerning to income tax, sales tax, etc. or GST. The next is prospective investors. These are third party which is not related to the business, but if they want to invest in the particular business, then they have to verify the trustworthiness or truthness of the data. And audited books of accounts or audited data will completely fulfill this approach of investors. So, prospective investors who wish to invest money in shares and ventures of a company rely on audited books of accounts.